Hello. So thanks a lot for being patient. I just realized that the live that I was using previously wasn't recording the voice. Yeah, so I had recorded another live before this one, and I noticed I wasn't audible throughout. So let me know. Let me know if you can hear me. Let me know if you can hear me. Let me know if you can hear me so that we can start off. I'd said, rather, I'd wanted us to look at what this NFP has for us. And I want to share my screen now so that we can start off. But just let me know in the comment if you can hear me loud and clear. Let me see. Let me see. Also, let me know if you can see my screen from your end. Are you able to see my screen? So today being the first Friday of the month, jobs have been created, basically means, and they'll be coming in 1 hour 4 minutes time. 1 hour 4 minutes time. One hour 4 minutes time. So this is it. The non-farm payroll. So it's basically the employment outlook that's in the US economy. We want to see how many jobs, the numbers to be high than the previous. Yeah, that is what the analysts are at least saying over here. We are anticipating the numbers to be high than the previous. So we are anticipating that more jobs have been created. And what does that mean? That means if more jobs have been created, then the economy of US is doing good, and so the dollar in response will be strong. So anything that's paired with the USD as the base currency will be buying. I'm talking about USD JPY, USD CHF, USD ZAR, all those will be buying. Anything that's against USD will then be selling. That is, if the numbers turn out anything from 186K and above. So that means anything with against the USD, that is Euro USD, Pound USD, Audi USD, NZD USD, Gold, XAU USD, all those will be selling. That is if we have high numbers of jobs reported. Also, if we have low numbers of jobs reported, that is if you compare the actual versus the consensus, and we find that the consensus is actually lower than 185K, then that will mean USD will be weak, where anything paired against the dollar will be buying instead. So Euro USD buy, XAU USD buy, Audi USD buy, anything now paired with the dollar as the base currency, USD JPY, USD CHF, USD ZAR, all those will be selling because the jobs report have turned out to be negative for the USD. That is why this aspect of fundamental analysis is very key for us as risk managers who are looking to get into the market to maybe make a few lots of money, if not many money from the market. What else? So I want us now to switch over to the charts, and then we get to see we get to see. So now I'll have to stop sharing this. We get to see what's going on in the charts. Okay, so let's give it some time. Still loading. Otherwise, also tell me in the comment section which pairs you'd like us to analyze. This is the chart for gold, XAU USD. This is the chart for gold. This is what has been happening in the gold market, XAU USD. So for me, I'm looking to trade this one today. And as we can see, according to the strategy that we normally apply for trading NFP is that we try to look out for areas that the market has achieved as the highest point and the lowest point, and we mark them out for our buy stop and sell stop region. And also that is point number one. Point number two is the sell stop region and the buy stop region, they are also our stop losses for either. So if you are looking to enter the buy, then the area that you marked out as your sell stop region is going to be the stop loss for your buy trade, and vice versa. So let's maybe look at another pair and see how that is going to turn out. Let me see. So let's look at a pair maybe like USD CHF, USD against the Swiss franc over here. I had already entered a trade in this one like 2 days ago, and the market has really been consolidating here. And today it almost took me out. But you see where I placed my stop loss, it did not get to it. So yeah, let's have a look at USD CHF and understand how we approach the NFP with the breakout strategy. So as we can see today, the the USD CHF market was able to achieve the area around 0. Buy in case the market gets there and then breaks to the up. Also, we are looking at 0.88810 as our area of sell in case the market gets to that point. During now the NFP release, it gets to that point and move reports turn out positive, then our buy stop will be activated, and then we'll have the areas, say like the previous highs, and also the EMAs, we will have them as our take profit regions. That is also how you set your take profit regions. You look at where the EMAs are, exponential moving average, and also previous highs. That is if the market breaks out with a buy. Now, if the market breaks out at, okay, you can even check out Euro USD. So let's go to the chart for Euro USD, and then we see what has been going on. So for Euro USD, as we can see, okay, this region. So what happens now, like for this instance, where you can see over here, this region is almost being triggered before the NFP release. That's another thing. When you see the market really moving close to your entry, please, you can be able, you are allowed, you are allowed to reconsider and maybe push it higher. So we can have this previous high over here as our potential entry for the sell. So I'm trying to so let me remove it, and then I mark out this, the previous high. So the previous high is the high of yesterday. We can have that one as our potential entry over here. Yeah, that right there, which is 1.09019 as our potential entry for the buy stop, where we are anticipating once the price gets to that point, it breaks out to the up, and technically if this price moves lower than the low that it hit today, then you can have this EMAs acting as our take profit regions. Also, in case you are not finding, maybe now for the buy, as you can see, we are not able to find previous highs, you can adjust your screen this way. Look at maybe this other high that was met over here. Also, you can consider moving to a higher time frame like H4, and then we try to see maybe other highs that the market created, where we can use them as our exit points for take profit. Now we can't find any that is near with H4, so we move now to daily time frame, and yeah, we can see there is this other one here, there's this other one, there's another one over there, and then there's another one over here. Wow. So you can use these previous highs for the buy as your take profit levels. So lastly, let's look at gold, and then I get a bit into position sizing. I would like to teach you guys something about position sizing. So let's look at gold, and then we move down to H1 because we want to see what the market has been doing the entire period of today. So yes, this is the chart for gold. Gold since 11 a.m. had a very drastic drop. Gold had a very drastic drop, and as it is, we are not able to. It's not advisable for us to use this low that it has achieved today for our entry for the sell stop. So question is, which other area can we use for our entry for the sell stop on gold? So then we just come and look at what the market achieved as the lowest point on Thursday, Wednesday, Tuesday, like that. So this is the price action on Thursday. Also, there's no lower point that is lower than today. On Wednesday, yes, we can see there is this one over here, which is at 2326.05. That is the lowest point the market was able to achieve on. That is what we are going to use for our sell stop area. And then now for the take profit, we are going to use these other lows that the market achieved previously, like this one can be take profit 1, take profit 2. You can also move to a higher time frame and set take profit if you are able to identify other lows that the market has achieved. Now for the buy stop, we are seeing we're having these moving averages that are over here. This is these two moving averages here. They are acting as a nice resistance level. So we can have that one as our potential entry for buy stop. So let me use the crosshair to identify it for you. This region. Sorry. So let's it's loading on M30. Let's move to H1. So on H1, if we were to use our crosshair and probably map out this one, This is 2351.15, 2351.15. That is an area that you can see is acting as a potential resistance point. So we can have that one as our buy stop, where we're anticipating once the market hits that point and breaks above it, then we are likely to see the market moving higher up to maybe this. There's this point over here, which we can have it as our take profit one. 23. This is 2358. 2358.71, where these EMAs are as our TP1, and then of course this today's high, which was achieved today, the high that was achieved today, 2386.59 as our other take profit. So yeah, in case you want more take profits, then you can just lower you can move to a higher time frame, maybe H4, and then you are able to find other regions that the market was able to achieve as the highest point. So there's this one over here. If we move further left, you just look at the areas where the market achieved as its previous highs, and then you set those as your take profits for the buys. That in case the market, the labor reports turn out negative for the dollar. So yes, there's that. What else? The other bit I would like us to focus on is on position sizing and managing a trade now. Because now we've seen with this trade, normally why we also like trading NFPs, because there is no spikes that tend to occur. If the market takes one direction, it's just that, and it's going with that. So I want us to, let me share this screen with you. USD. Okay, so there's a question over here. Someone is asking for USD JPY NFP direction. Let me just say, it's not our work as risk managers to try predict the market where it's going. Ours is to react to the news that are there. And the thing is, one sure way for us reacting to the news is through placing the buy stop and the sell stop, because we know if it takes one finite direction, then that's it. That is the path that the trade is most likely going to follow. So we are not able to tell the direction whether it will buy or sell, but ours is to wait to see which order will be activated, and then we go with that. And then now we're also supposed to deactivate, or rather delete, the other pending orders. So if it takes, maybe on USD JPY, if it takes the sell side, then we're supposed to delete the buys that were pending. Or if it takes the buy stop trade, then we delete the sell stop trades that were pending. So that is why we are using those pending orders. In case it takes one direction, then we are good. So the other thing I wanted to share with you guys is on how to calculate the risk for your, and over here we're going to use this site. It's provided by FBS. It's the traders calculator provided by FBS. And as you can see, I done for gold, euro, USD CHF, USD JPY, and then over here you input your lot sizes, and then the currency for that, the base currency for the account you're having. Also the leverage, the leverage that's in your account. Let me just mention that most brokers provide a leverage of 1:200 for gold. So if you're trading with any other broker that's not FBS, you want to leverage of 1:200 for gold. Why is this important? Now down here, once you've input all those, you click on calculate, and this is what you're going to find. The spread is something I want us to pay key attention to, and also the margin. That is the amount of money you're supposed to have in order for you to take that trade that is worth that lot size. So if, for instance, we are to take a lot size of 0.1 on gold, then you're supposed to have 42.92, approximately $43 for us to be able to trade. But if you're having $43, then we will not have given our trade breathing space. So say something 50 USD and above. That type of account is good to take a lot size of 0.1. Also, we're supposed to remember that there is a spread of 3.03 euros that's going to be incurred. So you take 3.03 and then you add it to 4.92, you get 45.95, which is the total cost that you're going to incur for you to take a 0.1 lot on gold. So that is one. Number two, we are going to break down our lot sizes to two. Don't take very many positions, because remember that time when the news is released, there's a lot of volatility. Also, as a trader, you tend to experience a lot of emotions in you, and you don't want your judgment to be clouded at that point. So we're only going to divide. So for instance, we're going to take 0.1, right? So we're going to divide 0.1 divided by 2, which is 0.05, 0.05. So we're going to have two trades of 0.05 for both buy and sell, and we're going to have them, of course, with different take profits, and then we are going to have them what did I want to say? I've forgotten what I wanted to say. Yeah, so that's it. I hope you've understood the aspect of position sizing. I'm also seeing time is running out. It's about to get to 3:30. In 43 minutes time, we'll be having 42 minutes time actually. We will be having the non-farm big day for us as traders, and I hope you've understood the aspect of position sizing. Please use that calculator to calculate your risk. Know the type of risk that you're getting into before the news is released, and also don't over leverage your account. Don't overexpose yourself to risk so much. Yeah, any questions for me before I call it a... Okay, there are no questions. Okay, so thanks a lot for your time. You guys have a great one.